Hello everyone and welcome to the Excedobytes channel. I'm your host Excedobytes, obviously, and today's going to be a little different. Essentially, today I'm valuing Tesla. If you look down here, there's a little tab down here called Tesla. So essentially what I'm doing is figuring out if Tesla's a stock to own for the long term. As you can see in this chart, I'm actually essentially comparing growth, if you say, of deliveries from 2018 to 2019, Q1 to Q4. Obviously, these three are not actually legitimate because, well, I mean, 2019 Q2 hasn't even ended yet. So these are essentially the estimates. So these estimates, this first estimate was Wall Street's estimate for Q1. The second estimate is the midpoint for uh, Elon Musk's um, expectations for Q2 because he was saying in the last call he expects around 90 to 100k, so I could just put a midpoint. And then these two, I'm just assuming that they're gonna deliver close to about 400,000 for the year because they did also, or Elon Musk did say that it's a pretty reasonable chance that they'll deliver around 400k. I made it a little bit more only because um, some tax credits are going to be ending in the United States, so I do expect that to give a little bit of uptick. So I imagine that they will be guiding a little higher because of that. Um, it's just my guess. So this 63,000 up here was basically how much they actually delivered in Q1. Basically, what I'm assuming in Q2 will be only around 91,000, only because there's not really any demand issues that I'm seeing, and that there's been there not no you know there hasn't been any new guidance from the chiefs over at Tesla. So I do assume that because of the production issues, they will and the delivery issues, they will end up not being able to reach the midpoint. And then I do imagine as we move into Q3 and Q4, they'll fix some of these issues and the deliveries will start increasing quite substantially. So with the midpoint of, I'm just assuming that they will get around 380, 390 in the midpoint for deliveries, which is in their guidance for 2018. Now over here, if we look over here, this is the actual share count. The shares outstanding, 178 million, and the market is currently open at the moment. It is currently 12 p.m. and the market closes at 4 p.m. Eastern Standard Time. So it's really hard to judge exactly where it's going to be, but when I checked it about 10 minutes ago, it was about 213. So if you're looking at the long term, a difference of $1 or $2 isn't generally going to make a big deal. Um, so essentially, if we come over here, we'll see deliveries, car revenue, average car cost, which is essentially the average cost of every car that they sell, leasing revenue, energy storage services, and then this would just be the sum of all of this. Well, not all of this, minus that, but yeah. Gross profit would be just based on a percentage, R&D, research and development, and SG&A, selling goods and services, and administration fees and all that stuff. Operating would just essentially just be gross divided by the minus the operating costs. I'm going to assume their tax rate for 2019 is not going to be that high, only because their operating income is going to be in the negatives, which gives me an estimate of negative 220 million for the estimated net income, which would be about $1.24, negative $1.24. Now, if we move over to here, I'm actually gonna remove or unblack out all of these, and then essentially what I'm assuming, I'm doing this by every 2 years, only because when you're looking at a longer term period, if you're going to be holding it for like 5 years or something, it just makes more sense. Originally I had stopped at 2023, but then I figured, what if I go up a little bit more when electric cars do become a little bit more mainstream, and in 2025 a number of countries are actually starting to put some bans on the ICE vehicles. ICE vehicles is internal combustion engine, which means a gasoline car, like my current car, which is a Toyota Corolla. Yeah, Toyota. Actually, my other car was a 96 Corolla. My new car is another Corolla, so I really like Corollas. But anyway, that's beside the point. Now, what I'm assuming in 2021, which is about 2 years from now, that they'll actually be able to ramp up production quite a bit. So I'm estimating around 1.5 million in total deliveries. 2023. This is actually based on Elon Musk actually had essentially an interview with one of the investment firms who owns the company, or quite a bit of the company. And he actually said in 2023, assuming things go well and there's no major headwinds, probably around $3 million in deliveries. And then this 2025 is my estimate. This is essentially this doubling is essentially me thinking, okay, some countries are going to ban it. Tesla's probably going to have solved a lot of their issues by that point, while some other companies will start developing and ramping up production for this, so they'll have more issues. So Tesla will be able to take advantage of that. I imagine when it comes to battery supply and range and all that stuff, they'll also have produced something much superior in that regard. And essentially, that's where I'm getting this pretty aggressive. This, I would have to say, is more on the optimistic side rather than the pessimistic side. And I would say probably a realistic side would probably be more around like 5 million, you know, based on just how the future is going. Anyway, then we just have the revenue and then the average cost. I imagine as time goes on, they will produce cheaper cars. So I imagine the average car cost is actually going to go down. I don't actually think it'll go down this much. So that's actually why I made it a little bit lower, because I am a little bit optimistic on my deliveries, and because of that, that's why I am lowering the average cost price, just to try to make it a little bit more even, because it's only fair. Leasing revenue, I don't imagine will be that much as time goes on, which is why I'm just assuming about 2 billion until 2025, when I'm assuming it'll be maybe 1 billion, could even be less. I imagine energy and storage will, as they sell more, things will ramp up more. So I'm imagining this essentially will be doubling every 2 years. Services, I'm also imagining will also have a pretty big uptick. I don't really know how to judge this, so I just I'm basing it essentially on like deliveries and whatnot. So this could be way off. So this is more or less just a guess, I can just say. And then total estimated revenue is all this. Gross profit, I'm still assuming about a 20% margin until we get into the later years, which I'm assuming as they deliver more, their margins will start to go up. So I'm assuming around 25%. And I'm assuming they will be rather aggressive on the research and development side. Now, it could be more than this, but I based the R&D off of a company, Apple. I'm sure everyone knows. I believe they generally do about 7 to 8 billion a year in R&D, and they're considered to be, a little bit more heavily invested when it comes to research and development and innovation and all that stuff. So because of that, that's where these numbers are coming from. Which is why 2025 I'm assuming about 10 billion, because as they'll be making more money, they'll be actually spending more on that. And then operating is just operating. Now when it comes to actually getting net income, that's actually very difficult, and that's just estimates. I'm just gonna estimate certain tax bracket, because companies can defer tax and this and that and all that other stuff, which is why I generally don't try to estimate net income, but for this particular case did, and naturally I took the easier way route, which is essentially just getting the average of all the automakers and just making it a little bit more. Average from what I saw was about 15% from like GM, Ford, and I think Toyota. So this is a little bit more, and I'm just adding a little bit more only because, just be a little bit more realistic. We just add a little bit more negativity to it. And I'm just assuming around 16% for the next little bit. And then towards the end, I imagine as the revenue goes up, marginally their tax rate will go up. That's why I only put it by 1.5%. And then essentially to get the EPS, you just do, price net income divided by total outstanding shares. Now, of course, this number could go down. I'm just assuming it's going to stay constant because if they're heavily investing in R&D and growing and all that stuff, chances are they're not going to be doing much share buybacks. They could reissue more stock. I do imagine capital will be not as much in the future, so I don't think that this 178 will go up too meaningfully. If it goes up maybe in 2021, maybe it's like 182 million, which is not too significant of an impact. Of course, it would be impacting these numbers quite a bit, but I'm just going to assume for simple case scenario, just average. Based on that, I'm getting these price targets. Now, I'm not going to show a price target for this year, only because they're currently not profitable or had a profitable year. They do sometimes have free cash flow positive. That is different. Because of that, I'm not going to look at short term, but moving 2 years into the future, assuming that Tesla's able to actually make a profit, they would actually have about towards the end of 2021, we would potentially see them have $1,000 a share. Moving into 2023, assuming things go right, and they have an EPS of around $123, their price target would be around $3,500. And then moving into 2025, if they're able to secure about 240 billion in revenue, they would have essentially a price target of about 5,500. Now, what do I think of the stock? I would say right now, emotions is a huge factor into investing. Anyone who says otherwise is just lying to you and just trying to make a quick buck. Long-term investing, if you're looking at something at a 5-year horizon, it's easier to really see the emotions behind it and just be able to see long-term growth. Short-term, I would say, unless you're a day trader, if you're a day trader, do whatever you want. I would say don't buy it if you can't hold it for at least until 2023. If it's a company that you can hold until 2023, I think it's a risk that you might be willing to take, because it could be profitable in the future. But that's just my opinion. Anyway, what do I think? I think Tesla potentially could be a good opportunity, but you have to be willing to hold it for a long time, at least until 2023, to potentially even realize any single profit. Because with the emotion factor and all other issues and other economic factors, Tesla is definitely a stock to not own if you need that money now. If you don't need that money, then it's potentially something you should take the risk on, but you have to think 4 to 5 years in the future. Now, if you're a short Tesla, then maybe Tesla is not going to survive, and that's totally fine, and then you shouldn't buy Tesla, because I'm not trying to convince you to buy it. Anyway, this is my 2 cents, and if you have any questions, comment down below and tell me what you think about this format, because I might be considering doing this more often, because I actually really enjoy it. Anyway, Cedar Bytes signing off. Fairly well.